Hi, everyone. Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. This is your state of the market. The markets, they're broken. It's just that simple. Now, we may not be getting these 1,000-point moves in the Dow every single day, but we are still getting 500, 600, 700-point moves every day. And that's not normal. It's not as insane as it was, but make no mistake about it, markets be crazy. But here's why I say the market is broken. Oil. Now, you may have heard that at one point in the last few days, the price of oil was negative. And here's how that works. Some people trade futures contracts on oil, and that means at some point at the expiration of the contract, someone has to take physical possession of that oil. The problem is there's nowhere to put the oil. Storage is at complete capacity. It's fully maxed out. You even have oil tankers that are just floating at sea, filled with oil, not going anywhere. Typically, it transports oil from one place to the next. Right now, they're just sitting there holding the oil because there's nowhere to put the oil. So going back to the futures contract, if you own an oil futures contract and you're going to have to take physical possession of that oil and there's nowhere to put it, you need to sell that contract if you don't want possession of that oil. But nobody else wants that contract either. Nobody else wants the oil and have to put it in their driveway or fill their swimming pool with it. So what ends up happening is the seller has to keep lowering their price and lowering their price. And it got to the point where they were paying people to take the oil off their hands. Now, that doesn't mean that you're going to be getting paid to fill up at the pump, hardly. But what it does show is that these markets are, in fact, broken. So what does this mean for the stock market? Because oil is not exactly the stock market, but all markets are correlated. I don't think that things are going to return to normal for a while. Again, because we're seeing these big disconnects in the market, these big kind of broken markets that are not acting the way markets typically will. It's just another reason why I believe markets, especially the stock market, is going to hit a new low before it hits a new high. So what do you do now? Start doing your homework on companies that you want to add to your portfolio. I recommend dividend payers, especially because they can help weather the storm a little bit when markets do head lower by getting the income from the dividend. You should be able to pick up some really nice yields as markets head lower now. Now, don't try to time the market and try to pick the absolute bottom. That is impossible to do. But put your cash into the markets in stages. You can do a little bit now. You can buy a little bit later if markets head lower. Look for companies that are going to be able to weather a recession, things like big healthcare companies, big drug companies, telecom companies, some of the larger tech companies. You could even, if you want to speculate, look at some of the oil companies, but make sure they have really healthy balance sheets. They have experienced management teams that have gone through oil downturns before. I think there'll be an opportunity to make some really good money in some of those names, but you're going to have to pick the really, really healthy ones. You can't just throw a dart at the oil sector and say, well, they're all beaten up, so they have to rebound. No, they don't. Some of these companies are going to go bankrupt. But there are going to be some fantastic opportunities to pick up some really strong yield and some healthy companies at cheap prices. So if you want to learn more about those opportunities, you can subscribe to my free newsletter, Wealthy Retirement. Just click on the link in the description. We'll be back next week with another State of the Market. Thanks for watching. We'll see you then.